we're going to start off the show with Dan Ives. I think it's appropriate to let Dan Ives at least make his point for 3 minutes. We'll listen to it. Some of you have seen it, some of you haven't. And then we will get into the topic of conversation. And the real topic is, does this $50 price target make any sense? Here's Dan Ives for 3 minutes, then we'll get into it.
Yeah, Josh, the AI revolution's here. And when I look at the next step, the use cases, Palantir, I think, is going to really be the one that's front and center in a lot of these deals. And we're seeing that through a lot of these cloud channels, a lot of the work we do in boot camps. Investors, look, if you've seen, they're negative at 6, they hate it at 12, despise it at 18, and screaming at 25. And I think this is a stock that has a massive move ahead of it, given where the AI revolution is heading. That's why it's the Messi of AI.
I was curious, Dan, reading your note, what had changed or what different information that you had to take you to that bull case? Because it looks similar to the case that you had made before for the stock. So was there more data that you were gathering to get you to 50 here?
Yeah, Julie, it's just in the almost 100 customers that we've spoke with, the conviction level is increasing. I think deals accelerating. And I think what we're seeing on AIP conversion is even stronger than we expected. Now, does that mean for this quarter, for next quarter? But when I look out the next 6, 12 months on Palantir, I think this is going to be a golden child of AI. And right now, I mean, institutionally speaking, it's very negative because I think many don't understand or appreciate the true, what I view as the competitive moat that Karp and Palantir built.
Okay, so let's start the conversation there and get into it. We're probably going to talk about this for the majority of the episode, guys, because this is the biggest news that happened this week, and this was obviously the sort of key headline around Palantir. Palantir ended the week at around 28.80. We touched 29.83 at one point, so it was a good week for the stock. But now we got to talk about valuation. So I think we'll start off. We'll start with Vince. What were your raw thoughts to Dan Ives' argument, and do you think it makes sense?
Well, I was very smart and sold covered calls at $35 when we went to very close to $30 a few days ago. And then I started sweating at night because somehow the whole market was pulling back and Palantir was not pulling back. And then Dan Ives came and I'm like, why does he hate my covered calls? And I sold them after this. At a, I don't know, $1,600 profit, and I'm very happy. I sleep better at night. The thing is, there's just so much good news. There's so much momentum, and everybody, including all of your guys' grandmother, knows that the growth is accelerating. We just don't have the numbers. I'm curious if Dan Ives knows something, because he said here that his due diligence and confidence is increasing because the deals are accelerating. He's speaking to customers, and AIP conversion is increasing. That was like word by word what he said, and I'm like, does he know something that we don't? And we also have, I don't think I'm supposed to say who. We have a guy who's on the front lines and of Palantir, and he said that it's just crazy what is happening. So we all know, I think that's what the market is front running, that the growth is accelerating. We just don't know by how much. And I think that the smart thing is to stay on the sidelines with covered calls and just wait until earnings and then rethink after earnings what we all think.
Okay, Arnie, your raw reaction to the $50 price target. You're muted.
There are many things to say, but let's start from exactly what Vince said, that I think is already an information. Why should he make an update just before earnings, just before the new information actually comes out? He tells, oh, I've been speaking with like 100 customers, but 100 customers is like 100 out of 500. If you remove 100 of the government, that's already a big chunk. So it's like he's having a sense from the conversation that what we were talking for quite some time about the projected revenues for the revenues for the next years which by the average analyst is to be around 20% going forward, it's like, okay, Dan Ives doesn't believe that at all. And he wanted to remark, okay, I'm confident that things are actually going better, and I'm willing to bet my reputation on that. And the second point, I think that encapsulates all our bull case is, despite the valuation run, despite the relatively growing understanding on Palantir, I agree that still nobody really understands what Palantir is, which is, by the way, our edge and our opportunity, because it will be when everyone will speak about the ontology on TV that we will know, okay, now here we are.
Okay. Let's do Matt, and then we'll get to Amir, because I know Amir has a lot to say. Matt, your thoughts, $50 Palantir.
50's a little extended, right? But I mean, we said the same thing when he came out with the $25 price target, and I was very bearish against that. You know, I guess it was close to a year ago at this point, or maybe it was close to 9 months ago. He came out with the $25, and you know, I think everyone was thinking, was that for the third quarter, you know, or is that, you know, for the next 12 months? So, I mean, $50 in the next 12 months, I think you'd have to see a large step change in revenue. And I think that if you pull back maybe a little bit about if Karp, when he was talking about 4.5 to 5 billion in revenue by 2025, 2026, if that actually comes to fruition, and then I could see where you have this massive acceleration in growth that just showed up out of nowhere. You know, you start getting that trailing 12-month revenue from all these AIP clients that have just been signed up over the past 12 months. I could see where, you know, the growth goes way greater than 30%, 40% even, and people start to say, oh my God, you know, this is the revolution that we've been looking for. Palantir is the king of AI, that I can see it. But until I get that warm, fuzzy feeling from the second quarter earnings, I think it's very tough to justify $50. But at the same time, I recognize this is coming off of a very fruitful past 2 weeks for me using the product. I see how there's always a use case for it, right? And how you can demote or decommission legacy systems within a business and continue to roll them into Palantir. And I see that on a, you know, I find myself doing that more and more, and trying to do that and justify that. And, you know, that's the front work that I do on a day-to-day basis. But at the end of the day, I just don't think that you're currently making enough cash flow to the bottom line to be able to justify $50. However, I will say, and I'm not necessarily surprised by this, is I wouldn't rule out the possibility that buybacks have started to become a thing for Palantir. And I say that because it might not necessarily be billions of dollars of worth, but you're seeing a massive support in the stock that I haven't seen in a very, very long time. And generally speaking, we know that it always travels in these troughs, but you'll see very early in the morning, it'll spike up. And it's been doing this for the past 2 weeks. It'll spike up about 4 or 5%, and then it'll slowly come down over time. And I think that that's either a heavy institutional buying or the company itself buying. And it doesn't have to be a lot, right? But it just has to be more buyers than sellers. So you're seeing a mass inflow of buyers, you know, in very first 2 hours worth of trading, and then it slowly dies off throughout the day. So that's been part of the reason why I think you see this run up from 23, 22 to 29 that we've seen, you know, over the past 2 weeks. So actually, it's been more than the past 2 weeks. It's been more like the past month. But so there's that kind of feel to it. But $50 is, I could talk in circles forever. $50 to me, you know, even in the next 12 months, I have to see a drastic step change in the second and third quarter earnings.
Okay, Amir, you didn't really agree with Dan Ives' logic around this and the price target. What is your concern with what he had to say?
I don't know what makes you say that. I'm not so sure. I disagree. Well, my first reaction was, well, okay, how does he arrive at that? Because we know that sell-side analysts always have some sort of numbers backing their targets. And then, of course, the numbers themselves can be manipulated to arrive at whatever you want. But we got some reasoning after the interview. You know, for his base case, I think per Market Watch, he cites $5 billion in revenue in 2027. And then he puts an 11x multiple on that for his $35 base case target. I know Arnie did some math on the $50 target. I haven't done that. But it's interesting because that's not really ahead of consensus that Arnie was hinting at before. Like, that's probably in line with consensus. For reference, he says they will do 5 billion in 27. I have them at 8.5 billion. So I'm way ahead of that. And
Right.
you know, I did a reverse DCF to see, like, if you actually do a valuation, what would the implications be of that $50 target today? And it's a bit different from what Dan Ives does. Dan Ives prices the company when he puts out targets, meaning he uses a multiple to arrive at a specific target rather than actually doing a valuation. So I did a reverse DCF exercise. I can briefly pull it up, share maybe.
Yeah.
I'm gonna zoom this in. You guys let me know if you can see. Let's see, share screen. You know, I'm not very tech savvy.
Oh, you're YouTube now. You have to be. This is your bread and
Okay,
butter.
just pull up my tweet.
It's on Twitter already?
many...
I'll just put it on Twitter, yeah.
Yeah, that's what the Modram found because he was tagged in it. That's why he...
Which
Oh,
means,
he
by
was
the way,
tagged
that
in it.
he's
Oh, I didn't even know you tagged him.
following.
Yeah, I used the equity risk premium that he calculated for the...
Okay. Makes sense.
Okay, so I calculated that if we use a 30% free cash flow margin, Palantir needs to CAGR exactly at 35.171% revenue over, like, for people that say, like, well, Palantir is going to grow at 30% CAGR for 10 years. Like, just so you understand the implications of the compound effect, this means $45 billion of revenue in 2033. I mean, this is not like impossible, right? This is a bull case. So it could happen. Like, it's not completely out of the realm of possibilities. But yeah, I did a quick calculation of, okay, how do you arrive at the $50 price target? And I'm really curious to hear what you guys think about the implications valuation wise. Now, we do know that Dan Ives does not do this. He simply puts a multiple on revenue from the future. But also another thing before we get into these numbers is that he always, I've noticed this in previous interviews as well, he stresses the sum of the parts.
Yeah.
He's been doing that for a while now, and I don't really get that argument. It doesn't really make sense to me because the government and commercial businesses should command the same multiple, in my opinion, and that's because they will compound, as per my calculations anyway, at a similar rate over a 10-year period, with commercial being slightly faster, but the revenue share will still remain close to 50-50. So I would be really interested in the Wedbush equity report. I don't know if you have it, Amit. I know that you like to share those expensive reports.
Yeah.
Just to see, like, does he share what multiples he assigns each business? I don't know if he discloses that to his clients. But yeah, without any numbers, it's hard to put any weight on it. But yeah, Arnie? I'm really curious why he stresses that.
Arnie, do you think what is your reaction to this to get to $50?
Well, it's not beyond the realm of possibilities, because we were used to think of, please return to 20% growth, please return to 30% growth, which was the long-term guidance that Karp initially gave. But the context was very, very different. So the thinking exercise that we can make is how much different is Palantir now compared with what it was last year. Like last year, if you look at it from a numerical standpoint and also from a qualitative standpoint, it's like, wow, like this stuff may be too hot compared with what is currently right now. But the evolution that has been on the track, like in this year, changed completely the trajectory. And what if this improvement in the trajectory keeps improving, keeps compounding going forward. We can't
But do you
really
think that could
know
CAGR at 31% a year?
35.
With 35.
That's obviously very ambitious, but given the context that we have right now, I would not exclude that. What I mean with that is how do you actually get to that 30%? You need to have a lot of customer acquisition, and I would argue, okay, the go-to-market now is firing on all cylinder. Like, we have evidence week after week, feedback after feedback, that the go-to-market motion is there. The market fit is there. And once the market fit is there, you have a compounding loop of, oh, actually, this stuff works. And you have the network of clients saying, oh, this stuff actually works. The customers see that, oh, this stuff actually works. And the bigger the network of the clients, the more compound effect you have. So we should not exclude that we could see something even crazier, like 40% or 50% to be sustained on the commercial side. On the government side is more difficult because it's already like more mature. But there we have always the opportunity of a big drop out of the sky of a huge contract that changes the trajectory. By the way, in this last quarter, we got Titan and Maven, which are the most important contracts for the DoD, which sets the basis for capturing the following next big contracts going forward. Because you have these important deals and you need to give them to someone who has already the reputation, the standing, the tech. So there are not many choices for that.
Vince, you want to play around with your model a little bit? I'll share it right now.
Yeah, sure. I mean, it's much simpler than Emir's, and it's basically based on the adjusted operating income. So this is X, the what is it called? SBC, 32% margin and 3% dilution. I think they are doing more than 3%. And in 20, I just wanted to play around with what it would take to get to a 50 share price. And I'm here going to use also a multiple, but it's a free cash flow multiple. So as you can see, currently what I'm thinking with is 25% growth, 32% margin, and a 50 free cash flow multiple in 2025. And it gives you a $24 price target in 2025. Don't hate me, guys. So if we increase the growth to 30%, and this increases it, all the way in the table, then we come to still only a $26 price target. So we also need to increase the adjusted, like the free cash flow in the company. Let's increase that to 35. We can see that we're still only at 28. So then we also have to increase the multiple. Let's increase it to 60 to make it double the growth multiple. Then we're still at a $34 price target, which I think is the base case for that. I mean, his base case was 35. So now let's increase the growth to 35. We are still at 36. And basically the only, like the free cash flow, I don't think it's realistic that we will go to 40 on a sustainable path. So the only thing that we can increase, that's a very, very, very high free cash flow. But fine, I give in just for the sake.
No, I actually think you can make an argument for 40, but maybe for a different episode. Let's not get into.
Yeah, I'm just gonna tell you what I don't like about this, but let's put it in. We're still only at $41. So now let's increase the multiple again to double the growth. Now to 70. Then we're in the ballpark of Dan Ives's bull case. And the only thing that I don't like about this is I feel that if I would be holding Palantir and this happens, I would be very happy. But to buy Palantir at this level, you're basically this has to be your base case. And if anything goes wrong, like their growth becomes 33% or their free cash flow is not 40, is 37, which is still crazy amazing. Or the multiple that the market assigns is not 80, it's 60, which is still a very, very high multiple, you're going to lose out on your investment, you know. And I don't like investing that way, and I think none of us invest that way. I much more liked, you know, when Palantir was down in the 6s and in the trenches, and you know, the government was free and you could just buy commercial. That's a much better way to buy. But
can you summarize what you did in your model? I don't get it. You put a PE multiple on what year, and how much did you reach
on 2025?
Okay.
So, and
But
it's not, it's a free,
why
it's a free cash flow. So this is the revenue, and then if they have 40% free cash flow, then they have 1.6 billion in free cash flow in financial year 2025, right? And then if you put a free cash flow multiple of 70 on that, then you get a market cap of 113 billion. And then if you divide it back with the amount of shares, where I'm thinking with 3% dilution, then you get 48.
So every period after next year does nothing in this model?
No, like it does when you go all the way here, right? Then you have a share price of 187 in with the same method in
yeah, but I mean, just for the target, like it doesn't matter what you have in like 10 years, just what you have next year. That's
exactly, because I'm trying to see how to get to Dan Ives's what is it, like price target in 2025 as a fair
most
value.
price targets are 1 year out, right? So that's why.
Yeah.